The bank reconciliation is the absolute most important bookkeeping task that needs to be done every month for every business. I'm AJ Stockwell, and I think the intro to my last video was a little bit too long, so we are going to jump right into this one. Today I'm going to talk about why it's important, and then I'm going to go through the high-level process of a bank reconciliation, as well as the most important step to it that almost everybody skips. The first thing that I want to talk about is the concept of your book bank balance versus the bank balance. And the bank balance is what you see when you log into online banking or you look at your bank statement. It's the balance according to the bank. And for most people, that sounds like your bank balance. That is the money that you have in the bank. But your book balance is actually the more important one to be looking at because it includes transactions that have not yet cleared the bank. And most commonly, this is going to be paper checks that you've mailed out that have not yet been cashed. So why is this important, or why does this matter? Why is it so important to keep your books updated and be looking at your bank balance according to QuickBooks? Well, let's say that you need to send out a $6,000 check and you check your online banking and you see that your balance is $10,000. So then you go ahead and you handwrite the check and mail it out. You don't look in QuickBooks or anything like that. And you think, it's all good, I have $10,000 in the bank. But then 2 days later, you look at your online banking and you see that your balance is $5,000. And that's because when you now actually go look in QuickBooks, you had sent out checks for $2,000 and $3,000 that had not yet cleared. So when you enter the $6,000 check that you had sent out, QuickBooks now shows a negative $1,000 balance. And now at this point, you are really hoping that you get some money in before that $6,000 check is cashed, because it might bounce and then you're going to have a very unhappy vendor, or, best case scenario, maybe the bank covers it and allows you to overdraft but charges you a fee for it. And this is just not a good habit to be in. So the moral of the story is to keep QuickBooks up to date and make sure that your bank activity is correct in QuickBooks. And the bank reconciliation is the number one, absolute, most important and best way to do this. So with a bank reconciliation, there are two main goals, and these are two main goals of pretty much any accounting function. And those are completeness and accuracy. Completeness means that all of the transactions that have gone through the bank are in there, and accuracy means that they're posted correctly and that there are not duplicates. So bank reconciliation especially focuses on completeness. There are some accuracy aspects to it, but really that's sort of making sure that you've posted transactions to the correct accounts along the way. Now we're going to go into QuickBooks and actually look at the bank reconciliation. And what I've gone ahead and done is actually put together a fake bank statement, which usually not something that you want to hear about an accountant doing. But for this training purpose, I've put together this bank statement and we're going to reconcile it in QuickBooks. And like I said at the beginning of the video, I'm going to talk about the most important step that almost everybody skips. Here is the main QuickBooks dashboard. We see this when we first log in. And to get to the reconciliation, we either go to Accounting and choose Reconcile, or we can go to the gear menu and click Reconcile under Tools. Now we're taken to this reconciliation window, and we need to check a couple of things. We want to confirm this beginning date, that it's the date of the last statement, and the beginning balance. And when I look at this statement, we see beginning balance 5432.22, 5432.22, and that this was July that it was previously reconciled. So we know that August is the correct time. So what we do is enter the ending statement balance and the ending statement date. So I'll go ahead and enter those. And the date is August 31st. And then we click Start Reconciling. Now, QuickBooks has come a long way for the reconciliation process, and I'm not going to go into it super in depth in this video. I may do another video on it. I do walk through all these different items in my QuickBooks training course, but this video is kind of focused on the importance of reconciliation more so than the actual process of it. So I'll show at a high level, but not go super, super deep. Now, like I was saying, this reconciliation process has come a long way in the last few years, especially with being able to import bank transactions through bank feeds. If you look at this little column, this means that a transaction has been added from the bank feeds. If a transaction doesn't have this, it wasn't added through bank feeds. And what QuickBooks will do is if you add something through the bank feeds, it will automatically mark it as cleared because it knows that it cleared the bank during this statement period. So what we do for reconciliation is we go through and we make sure that all of our deposits are checked off and all of our debits, withdrawals, checks, etc. are checked off. And one of the most important checks to do here, and not everyone always does this, is to make sure that this deposits amount and this withdrawals amount matches over here. So see 7631.20 of payments and 14,250 of deposits matches the bank statement. And the reason that that's important is because you could have incorrect transactions going both ways. Say you have an extra $1,000 deposited and an extra $1,000 withdrawn, you're going to get to the correct balance, but you'll have incorrect transactions, inaccurate transactions cleared. So that's one big tip. Now what we see here also is that we have some transactions that are not cleared, and this gets into why it's so important to do the bank reconciliation. So I won't open up all of these right now, but quickly looking, we have the $5,000 here that is manually entered, right? Because it indicates that it wasn't added from bank feeds. And then we have this other $5,000 on the same date that was added from the bank feed. This should stand out as a red flag, especially because the bank statement only has one deposit for $5,000. So there's a good chance that that other $5,000 transaction is incorrect. What I'm going to do, since we have this zero difference, we've got all of our transactions cleared, we've got the correct payments and deposits, is I'm going to click Finish Now. And now we get to the most important step of the bank reconciliation that almost everyone skips, and that is reviewing it and reviewing the reconciliation report. So we can click on the reconciliation report, and what we see is here's the statement information, but then we also have uncleared transactions as of the statement date. And those here total a positive $28.50. So our register balance, our balance according to QuickBooks, is $14,851.52. And this is something that at the beginning of the video I was saying we could depend on when we are sending out checks or something like that. But actually we need to make sure that that balance is valid. So let's look at what those uncleared transactions were. And here we have this section of uncleared payments and uncleared deposits. And here is that $5,000 deposit. I'm going to guess that that was not correct. And we open it up. There isn't much detail here. It's just posted directly to sales. So what I'm going to do is delete it because I think that it is a duplicate of the other $5,000 deposit. Now, if we go to our dashboard, and I'm opening this in a new tab, and we go to the business overview, we see that that book balance is now $98.51. And that is probably closer to the actual balance rather than that $12,000. But let's keep reviewing the reconciliation report. So the other two uncleared items are this check 1425, that was sent out on the 18th of the month. And I'm going to guess that that is totally fine, that that check just hasn't been cleared yet. We see that we had check 1426 cleared. And then we had a few other checks. It looks like I forgot to put in those check numbers, or I used it as expense rather than check because I was just entering those quickly. But we see check 1426 is cleared and 1424 had been on the bank statement. By the way, you should make sure that you're entering those check numbers. So I think check 1425 probably just hasn't been cashed yet. We do see this other expense to Facebook for $400, so that's probably Facebook ads. Let's go ahead and open that up. This is something that we want to look into because it sounds like this was probably a card transaction. If it was on the 9th, then we would expect it to be on the bank statement. Let's say that we did some digging in the background, we checked our credit card statement, and we realized that this $400 charge was actually on our credit card. So I'm going to go ahead and change it to that, and then I will save and close. The reconciliation report will keep those transactions because this is a report of that point in time when we reconciled it. So even though I've gotten rid of those two transactions, they're no longer at least posting to this account, we're still going to see it on the reconciliation report. Let's go back to our dashboard. And now what we see is that the balance is $10,251.52. So in our hypothetical world of checking the bank balance versus the book balance, our bank statement did say $12,000 balance, but because we have that check outstanding, the balance is actually only $10,251. So we would not want to send out $11,000 worth of checks right now. Once again, reviewing your bank reconciliation reports is one of the most important steps of the bank reconciliation. And whether you're a business owner or a bookkeeper, you should be reviewing this. And if you're a business owner that has a bookkeeper that does the bank reconciliation, you as the business owner should be reviewing the reconciliation report yourself for not only matching up all the transactions with the bank statement, or at least looking at the totals, but reviewing these uncleared transactions as well. If there are 3 things that you take away from this video, they should be that you always keep your QuickBooks bank activity updated. You look at your bank balance according to QuickBooks before you make big purchase decisions to make sure that you have the money to cover it, and that you always review the reconciliation report and the uncleared transactions after you do a bank reconciliation. Thank you for watching. Please give this video a thumbs up if it was helpful. Hit that like button. It will help more people see it. And don't forget to subscribe. My next videos will probably be talking about some more advanced bank reconciliation errors or issues and how to clean things up, like if you have a beginning balance that's off. So once those are available, I'll probably link them in this video. But in the meantime, make sure that you're subscribed and getting notifications so that you see when I post them.